Inflation is low, and that's good, right? Well, yes and no. Jim Lineweaver is here to clear up this contradiction. Jim is a certified financial planner professional with the Lineweaver Financial Group. Welcome back to the show.
Yep, thanks for having me.
How can low inflation be bad?
Well, you like to think that, low inflation with low cost of goods and for oil and gas and everything, that's all fine because you get more money at the pump. But unfortunately, for people that are retired and savers, they're not getting much money on their money that's sitting in the bank or a CD or things along that nature. So unfortunately, they usually have to come to other measures to try to combat what's going on in that low interest rate environment that's out there.
So how's the Fed determining that?
Well, what the Fed does is the Federal Open Market Committee meets, and what they try to do is they look at what the change in the consumer price index. So they take this basket of goods and they say, well, compared to last year to this year, did they go up in price or did they go down? And good or bad, they actually went down over the last year, and especially because of oil and things. So what that does is put more money technically in people's pockets because they don't have to spend it, but with no inflation, then what ends up happening is the FOMC really hasn't had much of a reason in the last 5-6 years to raise rates at all because of these low prices.
Okay, so I understand inflation that is affecting the investments and the return on the investments, but it also affects Social Security, right?
It does. And a couple months ago, unfortunately, they came out and they said there's not going to be any increase for next year for Social Security. And it's basically because this basket of goods. They're not seeing really any increases. Now, if you strip out oil's been a big part of this. So if you really take out the price of oil, there's a little bit of inflation out there. So chances are we're going to see some other rate increases down the road. But in the current time, at least for adjusting everything for 2016, you're not only not seeing an increase in the Social Security, but you're also not increasing any of the contribution rates for retirement plans or things along that nature.
All those things that are tied to those numbers.
Exactly.
So how often does this actually happen?
Well, every year. They actually look at usually the third quarter, and they're going to go back and benchmark that, and then what they'll do is they'll come out for the fourth quarter like they did this past year, and they said that, we're not going to have a rate increase, and that's going to kick in on January 1st. But every year you're going to look at this. The FOMC, they've been looking at cost of living adjustments since 1975, and almost every year except for 3, there's been an increase. So unfortunately, it's all been very recent. So you didn't have one in 2010, you didn't have one in 2011, and now again in 2016, you don't have another increase.
It's got to be hard for the seniors who are on a fixed income. Those who maybe aren't yet to that point. What can you do? Well,
yeah, if you're not to that point, at least you have some proactive measures that you can take. And this is where, even though they didn't increase the contribution limits for next year, the limits are still pretty high. And there's some catch-up provisions for people that are over age 50, too.
So if you're what are those limits?
Yeah, so if you're less than age 50 and you're looking at a retirement plan, what can happen is you can actually put in up to $18,000. If you're 50 and over, you get a special catch-up, so that takes another $6,000, so you can get up to $24,000. But a lot of people forget, with under age 50, you can add after-tax money to a lot of your retirement plans too and get all the way up to $53,000, and with your employer match as well. And if you're over age 50, you can get all the way possibly up to $59,000. So there's still great ways to save for people out there. And you know what I see a lot of people make a mistake on? They're not even putting enough contribution limits in to take care of the or maximize the company match that companies are providing you. And they're giving free money away, even if it's 10, 20 cents on the dollar, 30 cents on the dollar.
Take it.
Take care of it. Yeah, get that free money, and then try as you can get your maximum contributions up to these limits that we talked about.
All right, excellent advice. So low inflation can lower your retirement lifestyle. Follow Jim's advice and give as much as you can to your investments in the present so you can get the retirement life you want in the future. Need more help? Give Jim a call. His number's next.
For more information, call the Lineweaver Financial Group at 1-888-313-4009 or click to www.lineweaver.net. Next, well